Dirty dealings, corporate battles, consumer woes. This is Evening 5. Dato' Abdul Rahman Ahmad will be returning to PNB as its President and Group Chief Executive effective July 1st, 2024. In a statement, the government-linked investment company said it welcomes Abdul Rahman's return to provide continuity and drive the execution of its recently developed strategic plan, as well as help to deliver on its purpose of uplifting the financial lives of Malaysians across generations. Abdul Rahman, who was President and Group Chief Executive of PNB from 2016 to 2019, is currently Group CEO of CIMB Group Holdings, a role he has served since 2020. In a separate statement, CIMB said Abdul Rahman will step down on June 30th, while Dato' Muhammad Nasir Ahmad, who was originally due to retire this July, will remain as chairman effective July 20th to facilitate the transition. The lender said it has a robust succession plan in place and that it will announce its new group CEO in due course. The announcement confirms a report in the April 1st to 7th edition of The Edge Weekly on Abdul Rahman's return to PNB. The Edge reported that his role could likely be filled by Effendi Shahul Hamid, who is now CEO of Group Consumer and Digital Banking, a role he has held since January 2023. Analysts warn Malaysian airlines will be hurt by higher fuel costs, even as escalating geopolitical tensions in the Middle East are not expected to erode ticket sales. TA Securities analyst Tan Kam Meng said travel to countries in the Middle East is only a fraction of total tourists, but higher fuel prices would dent airlines' profitability. He said fuel costs typically account for 40 to 45% of local carriers' operating expenses on average, and noted airlines have already begun imposing fuel surcharges to combat margin compression. Over Apex Research, Head of Research Kenneth Leong said airlines may still see some margin compression due to the higher fuel costs after passing on most of the costs to travellers. Meanwhile, Areca Capital CEO Danny Wong said while travellers may avoid the Middle East, other regions such as Southeast Asia may benefit from the change in destinations. Shares of aviation-related stocks have declined, with Capital A falling 1.5% to close at 67 sen and AirAsia X trading 3.9% lower to end the day at RM1.25 apiece. The collective wealth of tycoons listed on the 2024 Forbes Malaysia Rich list grew 2% to $83.4 billion, approximately 398.8 billion ringgit. Robert Kwok, one of the world's oldest billionaires, maintained his position as top dog with a net worth of $11.5 billion. In second place is Tan Sri Kwek Leng Chan, Executive Chairman of Hong Leong Co Malaysia, with a net worth of $8.8 billion. The top 5 rankings saw some changes, with the Teh siblings, who inherited a stake in Public Bank from their late father, Tan Sri Teh Hong Piao, at third place with a net worth of $5.4 billion. They displaced aluminium magnates Kun Po Kiong and siblings, who slipped to fifth place with a net worth of $5.3 billion. Meanwhile, significant property gains propelled brothers Lee Yao Cho and Yao Seng into the top 5 for the first time, at fourth spot with a combined wealth of $5.35 billion. Rounding out the top 10 are Ananda Krishnan with a net worth of $4.8 billion, YTL Group's Tan Sri Francis Yeo and siblings $4.7 billion, property magnate Tan Sri Jeffrey Chia $2.4 billion, Genting Group's Tan Sri Lim Kok Teh $2.2 billion, and QL Resources founder Dr. Chia Song Kun $1.8 billion. MyEG Services and HeiTech Padu have formed a partnership to collaborate on IT projects in the country. According to separate boards filings from both companies, the two e-government services providers have inked a teaming agreement for the collaboration. This is with respect to their respective roles and responsibilities in the marketing activities, sharing of related know-how and system integration of IT solutions to potential customers. MyEG is a substantial shareholder in HeiTech Padu with a 15.9% stake via MyEG Capital. Via this same stake, MyEG co-founder and managing director Wong Tian Sun, who owns a 28.9% equity interest in MyEG, is deemed a substantial shareholder in HeiTech Padu. MyEG director Datuk Muhammad Jimmy Wong Abdullah, who owns a 0.09% stake in the company, is also a director of HeiTech Padu. The companies said both will continue to abstain from all deliberation and voting at relevant company board meetings. At the close, shares in MyEG were down 1.3% to 77 sen, valuing the company at 5.8 billion ringgit. Meanwhile, HeiTech Padu shares traded 1.7% lower at 2 ringgit 39 sen, giving the company a market value of some 241.9 million ringgit. Express carrier GDEX is proposing a diversification into the provision of information technology services and solutions amid stiff competition from foreign courier companies. GDEX previously acquired equity stakes in 3 IT firms in 2022: WebBytes, Sweet Mag Solutions and Anon Security. GDEX said these acquisitions marked the starting point of its turnaround efforts and that it expects the IT segment to contribute 25% or more of the group's net profit in the future. In its Bursa filing, it said this segment is positioned for long-term growth, driven by increasing demand for technology-based solutions. It added that it intends to continue to embark on additional ventures, such as investments, acquisitions and strategic collaborations with other IT companies to enhance the prospects of the group's IT services and solutions business. In light of the industry outlook for the IT sector and barring any unforeseen circumstances, GDEX said its board is cautiously optimistic over the future prospects of both the group and the IT services and solutions business. At today's close, the counter fell 2.9% to 17 sen, valuing the group at 959.04 million ringgit.